So almost everyone in Washington agrees, right, that some type of housing bill is needed, not necessarily outside of Washington, but someone to focus on helping homeowners while others want to help businesses caught up in the mortgage mess.
But which is best? Our Fox panel is here to talk about, including Terry Keenan from Fox News, Biz Radio Network host Mike Norman, Peter Schiff, author of Crash Proof, and Jordan Hepburn from Axiom Capital Management. Jordan, first do you have to decide, can there be a program that fits both needs, the needs of the financial banks and institutions that got in trouble and the homeowners?
David, it's a delicate balance, a good point that you're addressing. You want people to be able to keep their homes, and at the same point, you don't want to encourage speculation and flipping and reward the problems that have caused this problem. It's a very fine line to toe. I think that the taxpayer ought not to get caught taking this bill. I think that it's something that we have to get to the root of not excessively lending and not excessively causing the problems and then having to bail them out in retrospect. It's not good for an already fragile dollar. It makes sovereign nations look at us, and the dollar's status as a reserve currency ought not to be threatened, whatever the status and whatever the outcome of this is.
Maybe a little too late for that, Peter. The dollar's definitely threatened, but do you have to choose between these two bills? Obviously, these are what are being floated at the moment. Is there anything in either of them that you like?
Well, no, I wish we didn't have any bills. I mean, the government shouldn't try to interfere. They created the problem. Now they're trying to make it worse with their solutions. You know, people are going to have to lose money here. Lenders are going to lose money. Some people are going to lose their homes. But the government shouldn't try to interfere with the free market. You know, we used to make fun of the Japanese. We used to call it crony capitalism. What is this if the government has to bail everybody out? And again, the problem is so many people bought homes because the realtor told them they were going to build equity. They bought into a fantasy of wealth. They didn't care about their mortgage payments because they were going to get rich by owning homes. We need to get that psychology out of the market. We need to let prices fall, let the chips fall where they may.
I'm very happy blaming the government for practically anything, but there are some other individuals and institutions that have some blame. There is a lot of blame to share here. A lot of people got greedy. A lot of people thought they could go way beyond their means in order to cash in on a bubble. So it's not just the government.
No, it's not the government. And, we keep getting back to this same argument. Sure, you could let the market work this out, but, we tried that once before. It was the 1930s. We had a depression. There's a better way to do it. And you're right. Look, what happened was a period of, innovation, financial innovation that we've never seen before. Like most periods of innovation, whether that's in finance or industry or technology, it gets overdone, and we're seeing, a correction now. I think what is important here is to preclude or keep the economy from really going down the tank, and that's what these bailout proposals are designed to do.
Terry, part of me hates the thought that this could spur a depression, as Peter tends to sometimes feel, but you look at this situation going on in Asia of talisman bubble. These talismans that were supposedly blessed and would bring you good luck ran up to about $75,000 a piece. People spent too much on them. Now they're worthless because the bottom of the market fell out. It's like the Beanie Babies of religious icons. Are we bailing out talisman people, or it just doesn't sit right with some people.
Look what happened in Japan, and we want to avoid a situation where the economy is in the tank for 15 years in a kind of rolling recession sort of era, but we don't want to bail everyone else. Barney Frank is now the most powerful man in Washington, I believe, the Democrat who's the head of the Financial Services Committee in the House, and what he's pushing for is a massive government bailout to the tune of about $300 billion. That's just a start, where the FHA would guarantee these loans, and something unthinkable, lenders would write down the value of your mortgage, take it right here, $300,000, they would write it down by 15%, and you'd start from there. So
by the way, let me just put to Terry's point, Peter, if that passes, that particular bill by Barney Frank passes, $300 million guarantee, is all of that money going to be used? That is, will the banks and homeowners write down up to $300 million knowing that somebody's going to bail them out?
Well, I'm sure they're going to end up writing down a lot more. The problem is the government doesn't have any money. All it has is a printing press. They can't get rid of these losses. All they can do is transfer them. So what the government wants to do is transfer the losses from the people who actually incurred them to everybody around the world who owns
But
US
if they're
currency.
doing that voluntarily, look, if somebody buys a bond, a treasury or a municipal bond that's part of this bailout, and they do it voluntarily, voluntarily. In other words, no new taxes are levied upon anyone. If someone buys that bond voluntarily as an investment, then yes, it's a transfer of ownership, but it's a voluntary transfer of ownership. What's wrong with that?
Do you see it like that?
Yeah, this is an endless cycle of bailout, and at some point, this is, as I think we're all saying, it's a free market system, and there are going to unfortunately be businesses that fail. There's an excess of capacity. Businesses notoriously expand at tops and contract at bottoms, and we can't just keep printing dollars and print our way out of this without having some ramifications. We're going to pay the piper as a nation if there isn't some curbing of these excesses. So I agree with Mike's point. If you're going to buy in good faith a good piece of paper that's supposed to be backed by this, it needs to have some teeth in it. And as Mr. Frank said, it's got to have some skin for the government in it. We can't just keep borrowing and lending and robbing Peter to pay Paul.
All right. Of course, if you're going to sell a bond, you got to find somebody who's going to buy the bond. There aren't many buyers right now. We got to leave it at that, gang. Headed to the air.
Moments to go into the close of trading, and the markets are down about 57 points for the Dow, but we're off our lows. We have been down more than 90 points for the Dow. Still, we're seeing the biggest pullback in the transports, down 176 at the moment, that we've seen in a couple of months.
They are being killed on two fronts, by the way, both on the regulatory front, the FAA downing about 1,000 planes of American, and, of course, oil closed at a record high today. Our Fox panel is back to weigh in on all this, but first let's check in with Sandra Smith. She's on the floor of the New York Stock Exchange. What is the mood, Sandra?
Hey, Dave. Hey, Liz. Well, right now, a lot of traders are saying this could have actually been a lot worse than it is. We keep talking about how light the volume is, and a lot of traders commenting on the fact that when we have light volume, we can also have very big swings in this market. So we got some of the negative news out there. Traders took it in. We're well off the lows of the day, down now just about 53 points, but continued talk about the fact that Boeing is the biggest gainer in the Dow right now. If it wasn't so big on the day, losses could have been a lot worse, but that's really helping us to hold on here at the end of the day.
Okay, so Peter, when you see the trading movements that we've seen today, with those headwinds from UPS, but a little bit of a tailwind from Citigroup saying, you know what, we have found buyers for our debt. What do you think about the trading?
Well, Wall Street is pretty good at finding buyers. The problem is once you buy, you end up losing money. We ran into those, overhead resistance the other day, as I said, around, 12,700. We're headed back down. We got bad news, because of all the inflation Ben Bernanke is creating. Oil hit $112 a barrel. We broke through some resistance at around 110. We could have clear sailing now up to around 120. We got gold prices up another $20. The dollar is just near record low today against the euro again. There's a lot of bad news out there. The market's more likely to move back down to the lows.
So people buy to lose. That's your philosophy, right?
No, it's not my philosophy.
Wall Street
it's happened to me, but I didn't sell anything yet. Those are paper losses, all right?
That's true.
Look, the fact of the matter is, with all this bad news that Mr. Schiff here talks about incessantly day in and day out, the market's down about 12%. Look, if you take out the financials, if you take out housing, earnings are still pretty good out there in Main Street. That's what we got to think
That's the
of.
core economy.
I want to get Jordan in on this. Jordan, you take out. It used to be just if you take out housing.
See,
now it's financial.
core economy.
What's next, Jordan? Or is this a classic buying opportunity?
I think as long as we don't go back anywhere near those lows that we saw in January, I think we're okay. The key would be to watch the transports. Obviously, there's a little sensitivity today with the price of oil trending higher, but the transports, I think, hold the whole key. And if you look at the sectors that last year got thrashed the most, the financials, the home builders, selective retail, but especially the transports, the action's been better in the last week. This is a very healthy digestion so far. Hopefully it doesn't morph into more than this. But as of last Tuesday, we had an accumulation. The Dow showed an accumulation day 2 weeks ago, a follow-through day, if you will. The S&P and the Nasdaq confirmed that. We're having some backing and filling today. I think people are a little goosey about the price of oil. Commodities bouncing a little bit here, but I wouldn't call this game over at this point.
And Terry, the market is still up above 12,500. And to Mike's point, we had a guy on who buys a lot of houses, these foreclosed houses, in lots of 20 and 30 and so forth. He says there's no economic problem that the right price can't fix. And apparently Citi is finding those prices now.
I was absolutely stunned that Citi had $12 billion worth of stuff that was only worth 90 cents, because it's been trading like all of its stuff is worth 50 cents. So, they get a 10% haircut, and I guess this deal's going to get done. But, the stock didn't even go up on that news. And, Jordan has a point. I mean, there's no more economically sensitive stock, I would think, than UPS. I mean, it reflects what's going on in retail, reflects what's going on in business, it reflects the price of oil. And
transportation.
We saw that's what, was going on today. So we do have to watch the transports. But I also agree with Jordan that the market's looked pretty good here the last couple of weeks. And the transports probably will tell the tale.
Peter, you talk about gold jumping once again, $20?
Something like
but
that.
we're way off the earlier highs, which was 1,033.
Oh,
I
sure.
believe.
I mean,
Yes.
markets.
Okay. Here we are at $938.50. You now have people running around going like gold rushing, mining for gold, looking for little tiny flakes and saying eureka. This to me looks like yet another market bubble.
Well, I think those are the types of signs you would look for at the peak of a market, but I think there's going to be a lot more people doing it. I think right now the media is focused in on the one or two people, the novelty who might be doing it. But by the time I think we do reach bubble levels in the gold market, everybody's going to be panning for gold.
What price is bubble level?
Well, I don't know, because we don't know where the dollar is going to be worth. I mean, but my guess would be that gold's going to $5,000 to $10,000 an ounce.
5,000.
He's telling us back there in the green room how he's getting all these new accounts opening up, left and right, people wiring him all this money. He's been talking about this for 10 years, and only now people are, waking up to this idea of gold. Where you been all along?
2002.
But this is not the end.
Gold has been a terrible investment historically. It has been a poor inflation hedge. It pays you nothing, no
not
interest,
if you bought
no
it at
dividend.
300,
okay,
Mike.
so if you're a great market timer, right, Liz, that means you could probably be a great market timer in the stock market as well, and you make a lot more money.
You could have bought it at 300, 400, 500, 600 and still made a lot of money today.
You're saying that now.
You could buy it today at 9:30.
Well, Jordan, this is not the Peter Schiff show. Nevertheless, I just want to remind everybody that it was 4 years ago that Peter Schiff was saying $100 oil, and we were all going, never. He's saying $5,000 gold. What do you say?
I'm going to say that, firstly, on the oil aspect of things, I think Pete's partially right, or trending right anyway. Oil is a depleting asset. We're probably looking at 200 at some point, but we'll probably see 85. As far as gold goes, David, I think that we're definitely looking at higher prices. 5,000 might be a little Armageddon-esque. I think we're looking at probably 1,200, and you can see some very violent whipping back and forth like we've seen. I think you see 1,200, and eventually I think you're going to see 2,000. So you will get the commodities are volatile. They trade in a volatile fashion, and the fact is there are more people getting in on it. There are more institutions. We've seen the effect of hedge funds getting liquidated and forced out of the market. We've seen the velocity at which these things can correct, but I do agree that the path is going to be higher over the long
Terry,
term.
even Greenspan says, gee, food and commodities look awfully a lot like a bubble.
Yeah, I don't know. He should know, I guess.
Well, no,
but,
he doesn't know.
You see what's going on. You see what's going on the front page of the papers with they're trying to expand the Fed's balance sheet. That's another word for printing money. That's why gold's been going up.
But it's interesting, Greenspan, when he was Fed chief, there was a bubble in the dot-coms. He couldn't see that. There was a bubble in housing. He couldn't see that. Now he thinks there's a bubble in food.
He saw it, but he saw it in 1996, a little early. So,
All right.
Irrational
on that point, on irrational exuberance, well, no irrational exuberance today. Kind of as close as we can get to these volatile markets to a flat line, though it is down almost 50 points. It's still not down to those very volatile levels that we saw weeks ago. The market remaining above 12,500, and the trading day has come to a close, but the business day continues. And here's the financial news you need to know from